Rand trading touch weaker today, R6.73. We did go down to below R6.70 yesterday. So we got a very nice boost from those US non-farm payroll numbers on Friday, which seem to have improved risk sentiment. Markets a little bit more cautious though as the week progresses.
Morning, Stephen. Yes, absolutely. The Rand seems to have benefited from a number of factors recently. Firstly, as you alluded to, improved global sentiment on the back of those good data out of the US. We also still have strong commodity prices. Also looks like there's upside to South Africa's GDP forecast. We had the finance minister allude to that on Friday. South Africa's PMI came out better than expected. And then yesterday, we also had some very encouraging vehicle sales data. So all in all, it's looking very positive for the Rand, and in the short term we still think that the Rand has a very strong strengthening bias.
We're looking at those vehicle sales numbers. It was from March, 23% growth year on year, so not quite as strong as February's number, which was about 25%, but the momentum is still there. As the year progresses though, we're coming off a high base from the second half of last year, so we should see that number starting to weaken a little bit.
Yes, Stephen, as you mentioned, yesterday's data was really good, but on a month-on-month basis we saw the vehicle sales growth decline somewhat. It grew by 8.8% as opposed to 9% for the previous month, and as you indicated, of course the base effects do come into play, and one certainly wouldn't expect to see the same sort of numbers coming through every month. So looking forward to the rest of the year, certainly would start to see some moderation in vehicle sales growth, particularly once you factor in the fact that inflationary pressures are starting to rise quite strongly, and with credit growth still somewhat sluggish, it doesn't seem that households are going to be able to sustain the current rate of spending on vehicles.
To what extent is the resumption of carry trade helping the Rand? Because we saw particularly yesterday money flowing back into our equity market. We had seen money coming to the bond market prior to that, and really foreigners were net sellers between December and March, but it looks like net buyers again of South African assets.
Yes, Stephen, that's been a tad surprising, but I think if you look at what's happened in Japan recently, I haven't seen the strong repatriation of yen that might have been expected, and with the Bank of Japan seemingly content to leave interest rates, they've seemed to signal that, of course, given the economic situation, they're not going to be looking to either withdraw liquidity or increase interest rates in the short term. So it doesn't seem at this point that there would be any reason for the carry trade to sort of dissipate, unless one looks at the euro area where markets are expecting an imminent interest rate increase, which could dampen euro carry trade. But as far as the main drivers, that would be the yen, doesn't seem that there's any imminent dry up there.
Well, there's not much on the local economic calendar today. We have the SACCI Business Confidence Index. Is that something that could potentially drive the Rand?
Not likely in our view, Stephen. The SACCI Business Confidence Indicator is a monthly one, so it tends to be relatively volatile, and so markets are unlikely to pay that much attention to that, especially given that we had some vehicle sales data out yesterday, and then looking forward to the rest of the week. The ECB decision, I think, is really what everyone is going to be focused on.
How about the Fed minutes from its last meeting? They're being released this evening. Is this something that the market's going to be looking at? Because we have seen a number of Fed officials over the course of the past couple of weeks commenting on growth and commenting on accommodative monetary policy. Yes,
absolutely. So the release of the Fed minutes, that would be for the meeting that they had on the 15th of March. Certainly, in our view, going to be a key event for today. And as you mentioned, some Fed officials have made comments that the market is interpreted to be relatively hawkish. So that doesn't mean that there's going to be an imminent rise in interest rates in the US. But it does, or what people will be looking for today is just some sort of indication of where the Fed might go to next. It seems certain that they will see out the QE2 program, but today's minutes might signal where they'll be going to from there.
Well, we had the global manufacturing PMI out at the beginning of the week. We have services PMI coming out of a number of countries today, and it's not something that South Africa separates in its PMI numbers. Services PMI important for the markets?
I think it will be, Stephen, because these are the services PMIs for the UK and Euro area as well as the US. And in developed countries like that, the services sector does tend to make up the biggest part of the economy. So certainly growth in those sectors, or what will be alluded to in the PMI, will be something that markets will be quite keen on, particularly considering that in the UK and Euro areas, the PMIs were relatively disappointing. So hopefully one would see a bit of a pickup in their services PMIs today.